Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hi guys, welcome back to Top Stock Picks of the Week. I am Daniel LeBeau. My stock pick today is CrowdStrike, and this is the next generation of cybersecurity. And you know, with everybody working from home, there is so much concern surrounding these data threats and these data breaches. And CrowdStrike has its AI-driven portfolio, or platform, should I say, of 16 different modules on its Falcon platform. And it's an intelligent, evolving digital proctor that detects and stops breaches in real time. And you know, it's best in class. It's a cybersecurity platform that other cybersecurity platforms are trying to replicate. You know, they're just catching up. This company has been able to drive over 80% growth year over year, every single quarter since it went public last summer. And this company is just revolutionary in its approach to cybersecurity. And it's trusted by some of the biggest investment banks in the industry, including Goldman Sachs and Credit Suisse, who have the most to lose in this data-driven world. So I think CrowdStrike is a stock for the future, but let's take a look at the charts and take a look at the valuations to see if it's time to buy now or wait a little bit till we see a pullback in the markets and wait for the buying opportunity that we need. CrowdStrike has just torn up since the beginning of 2020. In the last 52 weeks, the stock is up nearly 300%, which is crazy, outperforming the NASDAQ 100 here, which already had a banner year. But, you know, I think this stock is a little lofty. We're trading at a price to sales above 40 times. And, you know, I'm waiting for a pullback. I think any price below $200 a share would be a tremendous buy. And as you can see here, according to our RSI, we're a little bit overbought. So I'm not jumping into this today, you know, sitting at these all-time highs here. But if we can get below this 200 level, I am a buyer. And like I said, I think that there's going to be a reckoning for a lot of these redlined IPOs from last year. I think there's a lot of euphoria in the market. I mean, some of it is justified. CrowdStrike, like I said, is the future of cybersecurity, but I think that we could get this at a better price. So I'm waiting for this quote unquote red inked bubble to pop moving forward into spring, and I'm going to load up on these CrowdStrike shares as they drive through the roaring 20s. So according to PwC, 96% of executives shifted their cybersecurity strategy in 2020 because of COVID-19. And despite 64% of these executives expecting revenue declines in 2021, 55% of them expect to spend more on cybersecurity in this year. And I think CrowdStrike is going to be a huge beneficiary of this shift. So watch out for this company to continue to move forward and continue to drive this tremendous growth that we've seen over the last couple of years. So thank you for watching my pitch here on CRWD, and I'm going to hand this over to Jeremy Mullen.
Hello everyone, I'm Jeremy Mullen here today for our Top Stock Pick segment. Today's pick is BlackBerry, ticker symbol BB. You might think this company makes old cell phones that nobody uses anymore, but BlackBerry has adjusted from being the top cell phone maker in the late 2000s to a brand new type of company. When the iPhone came out in 2007, BlackBerry slowly became obsolete and was eventually eliminated from the competition. The company has transformed itself into a cybersecurity software and services company and now is a Zacks ranked number 2 buy. The stock has recently hit 52-week highs after an announcement that they would collaborate with Amazon to create a new platform, but since then we've seen a pullback into technical levels. Let's take a look at some recent earnings, talk more about the company, and then look at some charts. In mid-December, the company reported a 300% EPS beat, surprise to the upside. This was the 5th straight surprise EPS beat, but it wasn't good enough as the stock gave a lot back of the recent run-up from the Amazon headline. The key to the quarter was software and services revenue that came in $168 million versus $157 million last quarter. The CEO commented that the quarter was delivered by exciting new technology releases, especially in their AI-driven BlackBerry Cyber Suite. I'm looking at more about the company and some fundamentals. BlackBerry was founded in 1984. It's headquartered in Waterloo, Canada, and has over 3,600 full-time employees. The company has a market cap of $4 billion with a forward PE of 44. Now, the valuation is a question, and that high PE has caused the stock to have a Zacks-style score of D in value. The company will have to make progress in a competitive sector to grow into their valuation and give investors confidence. The growth seen last quarter is promising, and investors are really excited about the partnership with that AWS to create a new platform called BlackBerry Ivy. The company hopes to create recurring revenue stream with this new partnership. Also, there's rumors out there that the BlackBerry QNX operating system might power the new Neo ET7 flagship sedan. Now, BlackBerry has a relationship with NVIDIA, who is teaming up with Neo, so there's a lot of speculation and rumors out there that this could be the case. Now, if this is confirmed to be true, this would be a huge catalyst for the stock, so let's keep an eye on that rumor. Now, the company is starting to see a lot of love from analysts. Over the last month, estimates for the current year have gone from 13 cents to 17 cents, or 36% higher. Estimates look to be trending higher for 2021 as well, with a 10% jump over that same time frame. Now let's take a look at some technicals. Okay, here's the chart looking back all the way to 2008, and this is when the company was on fire, when everybody had Blackberries and it was the hottest thing out there. Back then, it was called Research in Motion, ticker symbol RIMM, and it was one of the hottest day trading stocks out there. But of course, it made highs, and then the financial crisis hit, and it tanked. Now, what also happened was the iPhone came out in the year before the financial crisis, and there was a threat that it would take in the market share of Blackberries. So we did see a bounce with the bounce of the overall market after the financial crisis and the Great Recession, but the market slowly realized, and then after a couple of bad earnings, quickly realized that the BlackBerry was not going to be able to fight the iPhone. And so you can see how the stock just died over the last decade. It's just been slowly dying, and here we are under $10 a share. Now, fast forward to the last few months. This is the last quarter back into October. We see the chart starting to look good in November and perking up over the moving averages. And then, boom, the AWS headline pulled back, and then we kind of chopped. It looked like it was going to try to break out again. But then we had some earnings, and the earnings, as I said, were pretty good, but they sold it, and I think this is all valuation questions. However, came back right into a Fibonacci level, held twice, kind of tested this 50-day moving average, and now we're back above the 21-day. So the momentum is on the bull's side, and if we could pass this former resistance level of like 850 and get above 9, I can see these $11 price targets coming into play. Now, if we do get some confirmation on that Neo NVIDIA rumor that I've kind of been seeing out there, this could happen really quick. As far as buying into some pullbacks, investors might miss out if that comes to fruition. So, okay, that's it for me and my top stock pick, BlackBerry. If you like this video, check out more at zacks.com/promo.